Ladies and gentlemen, welcome to Man in America. I'm your host, Seth Holhouse. So, after my last interview with Aaron Brickman, folks have been on the edge of their seats waiting for an update, with the big question being, are we still on pace for a 1929 style crash? You asked me, what will happen to our 401ks, bank accounts, and pensions? How about our mortgages? Is our cash safe in the bank? And how would a crash affect our everyday lives? So I sat down with Aaron for nearly 3 hours last night to ask all your questions and to understand where he believes the market is headed in the coming months. Because the interview was so long, I've broken it into two parts, with part one being practical advice on how us everyday Americans are going to get through the coming crash. In part two, which will be released on Friday, we took a deep dive into where Aaron believes we're at in history, the spiritual battle of good and evil, how to get enough Americans to wake up in time to save our nation, and all the signs he's seeing that the elites are more and more frantic than ever before. And as always with Aaron, get ready for some aha moments and to bend your mind around all kinds of new perspectives. I hope you find this interview as valuable and thought-provoking as I did. Now, before we get started, make sure you're following me on Telegram and Truth Social at Man in America. You can also catch every episode as a podcast if you just want to listen. The links to my podcast and social media are all in the description below, or just search for Man in America in your favorite podcast app and make sure you leave us a 5-star rating. It really helps to reach more people. And folks, by now we all sense that we're in for a bumpy ride for the foreseeable future. Much of the world is going through a process that experts are calling de-dollarization, and China and Russia are leading the charge. So what does this mean? Well, the US dollar is a fiat currency, meaning it isn't backed by anything of value. The only thing that really gives our dollar real value is its demand around the world. But now, and especially under the corrupt and incompetent Biden regime, the rest of the world is fed up with the Federal Reserve printing money out of thin air and demanding to trade it for things of real value. So though the dollar is strong right now, it's only because people are fleeing the European currencies, and its strength is short-lived. This is why Russia's already backed its currency with gold, and many other nations are expected to follow. But what happens if the dollar loses its global reserve status? Well, for most of us Americans, the US dollar is all we know, right? I mean, all of our hard-earned money is completely tied to it, whether it's through the stock market, our bank accounts, pensions, 401ks, etc. The value of our dollars, our life savings, could literally be wiped out in a matter of months, weeks, or even overnight. And look, I'm not a financial advisor, so please do your own research. But I believe that now, more than ever, it's a good time to consider transferring at least some of your wealth into physical gold and silver. Real-world assets have stood the test of time, whether it's market collapses or currency collapses. And for this, I'm confident recommending Kirk Elliott. You can buy gold and silver directly, even in small amounts, or you can transfer your IRA into physical gold and silver with zero taxes or penalties. Now, look, I want to be really clear. You don't buy gold and silver to get rich. You do it to protect your wealth, especially in times like these. So now's the time, folks. If you want to learn more about this, open up a new tab right now and go to goldwithseth.com, or you can call 720-605-3900 to speak to someone right now. Kirk Elliott's team of advisors will answer all of your questions and take care of you every step of the way. Again, that's 720-605-3900 or goldwithseth.com. And remember that the phone number and the website link are in the description below. All right, so folks, I really hope you enjoy this interview, and make sure you come back on Friday at 2 p.m. Eastern, where we're going to be premiering the second half of this interview, which goes deeper into the spiritual and really encouraging realm. So I hope you enjoy. All right, folks. So here we are with Aaron Brickman. Aaron, thank you so much for not only doing the first show together with me, but for coming back. I have to say, I rarely get the kind of positive feedback that we got from the first show that we did together, not only from just the financial analysis and those details, but it's almost seemed like more people were moved by the deeper spiritual analysis of what was happening. And people just loved that interview, and they've been begging, like, please, when are you having Aaron back on? When's Aaron coming back on? So I'm happy to finally have you back on the show. Thank you.
Well, thank you. I really appreciate this, Seth, and it's an honor and always a privilege. And Yeah, thank you. And I got some really good positive, really from all the shows that I've done so far, which is really only, Doug Hagman, yourself, and Mike Adams. And I really like, I can say it, the trifecta that's going on here. Everybody's a little different formats. And, I'm just a regular guy that has this opportunity. I know you can identify with that. And so if I always tell people, if I say something intelligent, it's because God's talking through me because I can be quite the knucklehead. So hopefully he'll have something to say tonight, and we can all learn. So,
I'm sure that'll be the case. So I wanted to, there's a handful of different topics I wanted to dig into with you. And I also just want to give a quick thanks to the Telegram group, the Man in America group chat, because I had like, probably a couple hundred responses to questions that people were wondering. So I really wanted to have part of this interview dig into the nuts and bolts of what does this mean for the average American, people that aren't, watching the stocks minute by minute, and aren't shorting and understanding how that whole mechanism works. So at some point, probably later in the interview, we can dig into what it means for banking, 401ks, mortgages, cash in the bank or cash in under the bed, et cetera. So a lot of those questions we can get into. But if we can first just start with where are we at? So I know that when I had you on last, it was a follow up from you being on Doug Hagman's, which was really the bigger picture being that you saw a lot of these indicators and cycles all aligning and pointing to the fact that it looked like that the perfect storm was being set up for a market crash, which could turn into a collapse. But it was really you were very specific about those terms. Crash was a term that you'd used, but it was really based upon the behavior and whether the market followed the right patterns, especially as related to what happened, say, in 2008, 1929, et cetera. So we're recording this on Tuesday evening. I'll be publishing on Wednesday during the day, so that way people can know if they're looking at the stock markets. And so it's this past couple, Monday and Tuesday we saw, I'd say, more of a rally. Dow was up, I think 500-600 points or so each day. I'm not tracking it like you are, but the big question is: are we still following the patterns that you initially had, kind of laid out? And do you still think that we're headed most probably towards a crash scenario?
all right. So we'll take first things first, which is the pattern that we had been discussing and I had laid out over the last 2 months. Um, so on just to recap for maybe some of the new listeners. So on August 25th, I did a Doug Hagman interview. I laid out a series of a hypothesis, really, which was that we were headed towards a crash. That hypothesis has to fit a number of criteria, a number of mile markers that are present in a roadmap towards a crash. In 29, 87, 08, 2020 to a smaller degree, but it's still there in the charts. All had the same sequence of literal percentages, days they would turn, trading day counts. It's quite exotic. I won't get into it tonight. Somebody can go back and listen to those previous broadcasts. But I made a series of predictions based upon, they were predictions, not, I wasn't foretelling the future. I was saying if we're going to follow the map, you know, these are the pivots. This is where we have to go. And so they were, for all intents and purposes, the market did that. The market hit all the pivots. I mean, like crazy did it. Like, we turned at Rosh Hashanah and we rallied straight into Yom Kippur and we had to top, the day before or the day of, and we did. And then it has to go all the way back to the bottom and it has to be there by a certain day count. And then even last Thursday and Friday, that tremendous bounce reversal on Thursday that we saw was literally within like 21 hundredths of a percent that 1929 and 2001 or 2008 and 2020's 1987's bounce was. So it was like, oh my gosh, and so I said, look, you have to have there's a certain criteria of conditions that have to be present if you're going to have a hurricane or a tornado. But just because you have those weather conditions present doesn't always ensure you're going to have, a tornado or a hurricane. So all those conditions have been met. Okay. Now, I want to be very clear. Those conditions are completely separate and independent from larger time cycles that I talked about that included, the Saturn Uranus 45-year cycle that's due to bottom later November, as well as a 20-year cycle going back to 1942 that's due to bottom in November, as well as larger cycles, bear market cycles that are due to bottom, as late as next July. Okay. So whether we crash or not tomorrow morning, that's just a meaning, in the next couple of weeks, that in no way invalidates the larger downside cyclical forces, these cycles that are going to be exerting tremendous pressure to the downside on the markets over the next 6 to 9 months. Okay. So I think some people I've had on Twitter are like, oh, well, it didn't crash. So are we going to new all-time highs? I'm like, well, anything's possible, but it's not all or nothing proposition here, right? Um, so with that being said, we have met all the conditions that were present in the 29 and 87 and '08 analog for a crash. And we met them almost, I put out a tweet maybe 2 weeks ago that something was seriously bothering me and I couldn't put my finger on it. And I won't go into the details of it, but I could just sense something was not right. Even though we were hitting all the mile markers, I know this sounds weird to some people, but a lot of trading, everybody thinks trading is an art form. And I'm not good at it, by the way. I'm not a professional trader. Okay. It's like there are really great traders out there, and they'll tell you there's a lot of technical, but there's also a feeling that goes to it. They called it reading the tape back when we had a ticker. Okay. And you can just feel the ebb and the flow. Kind of like in sports, you can feel the energy, you can feel it shift to an opponent during the game. Okay. And even before they intercept the ball, right? You can feel that something's not right. This is about to shift. And so I was feeling that last week. I didn't understand why, but part of it was because everything was super accurate and easy. Okay. Like crazy. Like people will go back and listen to all my predictions. They were crazy accurate. Okay. According to this map. And when something starts getting really easy, I get really nervous. Okay. Because something is not right. Something not right is the last 48 hours. Okay. The last 48 hours in the market was now that something's not right. Without getting technical with the audience and having to go through charts and stuff, '08 was crazy hard to trade, like insane hard to trade. There's no just one direction. They're like one day they're up, 2 days they're down, then one day they're up. I mean, it's like all over the place, right up until you crash. And I can tell you in real time that was super hard to trade. This was like 1987 and 29 on the chart. It was just easy, and we're just going down, and there's hardly any rallies. And the last 48 hours, it's starting to feel like '08. It's starting to feel like what it really should feel like. And and I know there's a lot of what I'm going to say is counterintuitive, but the Wall Street, I mean, we have the bull symbolizing bull markets. Okay. Well, if you're about to kill the bull is not going to just lay down. Okay. It is going to be right. We've all watched, the PBR, professional bull riding. It is going, if you can stay on it for 8 seconds, you're a champion. It's going to, and that's what this thing is now trying to do. There was too many people short. Everybody was getting short. Everybody knew, and now hardly anybody does. Now everybody's a little confused. Okay. And as we go every day, everybody gets a little bit more confused. That's what '08 was.
So a quick question for you. And so Just one thing to, I had someone ask in Telegram, can you explain what it means to be short?
I will give the 5-year-old definition.
Perfect.
We want to
That's my definition.
okay. The 5-year-old definition is if it goes down, I make money.
I see. So you're
Okay. I'm
basically
going to
you're
bet.
betting, you're putting your
I'm
money
betting that,
on it going down, right?
yeah. And there's all kinds of, whether you can get, reverse ETFs, or you can get actual, futures or options on futures that, puts, they call them, you could have calls betting it's going up, or you could have puts. Um, but I'm using, I'm basically, for those out there, I'm using ES futures and options on ES futures. Okay.
Okay. And so when you
Um,
said that leading up to this week, that too many people had shorts. So basically, there's a lot of people, it's not just you that are seeing this coming and shorting the market. And so a lot of different traders are now shorting. And then it's like when the bull starts bucking again, as it did Monday, Tuesday, that throws everything off. Is that
and well, what it does is that they all cover their shorts
so
because they don't
they
because they're
pull
going to
out of
lose
their short
money if they stay
positions?
correct, because they'll still lose money if they hold on to those shorts. So now they cover their shorts. And so you get these violent, what most people don't understand is that the biggest rallies occur in bear markets. Okay. So it's kind of uncommon if you think about it during the bull market of the last 2 years, 3 years, when, after the COVID lows, where you'd have 3 and 4% moves in a day, or you'd be down 2% and then all of a sudden reverse it, and an hour later be up 1.5%. That's the kind of stuff you see in bear markets.
Mm.
Okay. It's going to throw everybody off because they can't, the easy way is they can't pay everybody. They're not going to pay everybody to make, I mean, it's not, making $1 million in life is hard. If it was easy, everybody would be a millionaire. And so what bear markets are notorious for doing is they actually take the bull's money and the bear's money. So just because it's going down, a lot of those guys still won't be able to make money because of this type of volatility. Okay. So you have to either be really good at what you do. There's always luck involved so there's a percentage that are just lucky, or you have to be so obstinate that you're just going to just close your eyes and endure the pain and suffering until the end, and really have that fortitude that you actually believe that in spite of what your eyes see and in spite of what you're feeling, that it's going to crash. Okay. And I'm not saying that's good. I'm just saying those are the type of people that are going to, you know, because right before it crashes, it's going to look like we're going straight up. Give you an example. Somebody can go look at a chart and go look at September 18th and 19th. Wow, that's interesting. 18th and 19th, I just had a thought. 18th and 19th of September '08. Market is on the verge of crashing. I know because I was short. Hank Paulson comes out on a Thursday at noon, backstops the money market funds, and the stock market goes up, Seth, 11% in 1.5 trading days. Okay.
Wow.
And I was short. I can tell you it was the worst 2 days of my life. Okay. And I went into that weekend thinking, oh my gosh, I'm dead. Like, I'm dead. Like, this is insane. I'm dead. Like, I thought it was crashing. I know it's crashing, but what the heck? And we come out of the gate on Monday and we literally started the 3-week crash. What they were doing is they were clearing everybody out who was short right
I see.
before. Okay.
Now,
So
here's
some
a
people, yeah, go
question
ahead.
for you is when you say that they were clearing everybody out before the short, it almost implies or paints a picture that there's a control of what happens with the market. That I mean, is that a correct understanding? Is that it's not just some kind of anomaly or some representation of everything, and the human condition kind of mapped onto a stock chart? Is it intentional? That do you think that maybe it's the Fed or whoever it is, that they know that the crash is coming, and so they're doing some last minute tricks?
Well, okay, so that's a great question. So I get this question all the time. Is there manipulation on Wall Street? Yes. Okay. Is there collusion? And let me rephrase that. Does the Fed intervene in the markets? Yes. I can tell when the Fed's intervening in the markets, and I'm not going to get into how, but traders you can tell when there's some key intervention in the markets and how it trades, and especially what time these inflection points show up. But putting the Fed intervention aside, just the banks and just the trading desks. Okay, there's so much money that even if they want, let's say they want to get short, let's say they know it, there's a number of ways they can do this. And I'm not going to get into the mechanics of how they can do it, but they can buy at key support levels, and they can also sell at key resistance and key support levels and goose the market and create, because they're dealing in billions. Okay, the average investor, even if he's wealthy, is dealing in millions, right? Okay, so this is in big beats small in capital markets, right? Um, and and it doesn't mean that they can alter the overall outcome. Okay. There's no entity is bigger than the market and natural forces. Um, but can they delay it for a day? Can they position themselves and their clients properly by causing um, rallies or collapses at key inflection points on the chart? Yes. Okay. For a moment in time. Okay. Um, and that's you know that's what they're definitely doing that.
Makes sense.
Okay. I mean, we haven't had true look, even in during free markets, and somebody's going to say, well, that's not a free market. Look, that is a free market. Free markets are not fair. Okay.
It's true. The
Right.
big guy still
Okay.
he ripples the water a lot more when he throws his rock in there.
Yeah. And if you want to talk about not fair, go study the history of Wall Street in the 1800s if you think it's not fair now. Okay. We have the playing field is much more even now than it has ever been. But you know, free markets, just because it's a free market doesn't mean that there's not capitalists with a large sum of money who are going to do the best they can to seize an advantage.
Yeah.
Um, so, having said that, with where we're at, the last 48 hours, we have these. I put out a tweet on Thursday that was very timely, or Wednesday, and I said, volatility is about to increase over the next 2 days. And that's because of what I saw in the charts. Now, I didn't realize it was going to carry over into the last 48 hours to the upside, but we are definitely now starting to see volatility, like way higher than we've seen it in the last couple of months. That to me is not a good sign. That's a bad sign. Okay. It means that there's a lot of indecision. There's a lot of people losing and making money every hour and then losing it again as it's just the moves are getting exaggerated. Okay. And I liken this to an earthquake. Right before an earthquake, you're going to start to get some pretty sizable tremors. Okay. It typically doesn't just sneak up on you. Okay. There's something before the fault totally gives way. You're going to start to get, larger tremors, larger earthquakes preceding the big one. So some people are like, oh my gosh, we're going up and then we're going down and then we're going back up. Does this mean that we're not crashing? I'm like, are you kidding me? This, regardless of your roadmap, that's not healthy. That is not healthy. Because in a crash, you're going to get really exaggerated moves. And when I say, exaggerated moves in a typical market, maybe you're doing 1% a day, maybe, right? I mean, you start getting into right before the crash, you start doing 2% moves. Then they get into 3-4% moves. Then typically during the week of a crash, you're talking 6-7-8% daily moves. I mean, they're crazy. Okay. And people want to check that, go look at the last 3 weeks of the 2008 crisis. Okay. That late September, early October, and just measure the moves. The intensity is increasing throughout those weeks. Okay. So that's clearly happening now, at least in the last 4 or 5 days. So moving forward, I believe personally that we are, okay, I'll give you a bad analogy. I've traded three crashes so far in my life. Um, I always liken it, and I tell people, I've been telling people this since the '08 crisis. When it's time for a crash, this is what it's like. It's like me taking you to the edge of a cliff at the Grand Canyon and blindfolding you. Okay, and I back you off about 2 feet from the ledge, and I blindfold you, and I tell you to find the drop off. And you have to be super careful. You have to lean forward. And what I liken it to is tapping the ground with your foot before you put too much momentum forward. Because if you move your body too far forward, you will not be able to catch yourself and you'll fall off the cliff. Okay. But you're blindfolded. You know it's somewhere close. But once you find it, if you're not careful, you'll be in free fall. Okay. Well, that's where I think we're at. I think where everybody senses you're close, in spite of, it's up, it's down, you're close. Volatility is picking up. I will say this, and I've said this repeatedly on the numerous broadcasts. You cannot go below where we've been. I'm telling you, you do not want to go below 28,000 on the Dow. Actually, it's not 28,000, it's 28,725. Okay. And yes, you can go to 28,724 without crashing. Okay. But you can't. And here's why. That's a major support level. It was established there in June, and we had a huge rally off of it. And then we came back in Rosh Hashanah and we bounced off of it. And then we came back to it on Thursday and we bounced off of it. I mean, how many times can you bounce off of it before? Because what it's doing each time it gets there is it's eating support. There's less and less people willing to step in and buy it. Okay. And at a certain point, you're going to get there and there's not going to be any buyers, or there's not going to be enough buyers, and the sellers are going to get the advantage. And then you're just going to go into free fall.
Breaks through, it's like nothing will stop it then.
Yeah. I mean, you're going to have to go to the next support level, and the next support level would be, I'll do Dow because I know the average listener probably watches the Dow, even though traders do S&P. But for the Dow, I mean, you lose 28,700, you're 21 to 24,000 minimum. And I'm not talking you're going to get there in a couple of weeks. You might be there in like 5 days. Okay. And I said this on Mike Adams' program yesterday. If you get below that, and there will be a bounce there. They're not just going to think there's going to be a bounce there. There will be a bounce there. Could be fast, could be a couple of days. I'm not talking weeks, or certainly months. But I said, look, if it gets below 21,000, you have problems in the banking system. It's that simple. And if you get below 21,000, we're headed to 11,000. I kid you not. I know I can prove it. I can talk to you for an hour and prove my case with the charts. And we haven't been at 11,000 on the Dow. 2011, 12, somewhere around then. So you're talking 70% loss in the stock market in less than a year or a year and a half. Okay. By the time we get there, I think we're going to get there next year. I don't think it's going to be this year, but it could. But I think it's going to be next year. So let's say it's even by next June to get to 11,000. That's 18 months to lose 70%. If you're in a 401k, that's that. Well, let me. Not only is it a crash, Seth, that is way bigger than 1929. Okay. 1929, yes, 1929 was 89%, but that was from 1929 to 1932.
Oh, I see.
Okay. The crash in in 1929, that 40-day period, 45-day period that everybody talks about. It was when everything was said and done, in the early part of November, you're talking 45%. That's it. I could totally see us this year at 15,000.
Which is, yeah,
If they
50%.
lose the 21,000 support level, yeah, now we're talking about a lot of capital loss. Look, up until about a week ago, there was already 40 trillion just in the US markets alone that were lost this year. 40 trillion. We're not talking global markets, and we're not even talking about a crash yet. Okay. Those are numbers that the human mind cannot even conceive of.
Yeah.
Okay. $1 billion is 1,000 million. A trillion is 1,000 billion. I mean, these numbers are just, and we use them, we read about them in the news all the time, and we have no concept of what that is.
Yeah.
We really don't.
These are like
or how much work and how
multiple
much sweat
country
labor.
economies stacked together.
Yeah. I mean, you're talking about years of investing horizon, years of productivity, years of GDP.
It's wiped out.
That's wiped out.
So
I think it's like 1920. I'll give you the stats real quick for 1929, and I don't believe this is going to be the case this time. I think it'll be far faster. But if you were an investor at the top in 1929, adjusted for inflation, you did not get your money back until the early 1950s.
wow.
That would suck if you needed a faster rate of return
Yeah.
on your capital. Okay. I mean, so if you depending on what your investment time horizon is, so if you were 50, that was unacceptable.
Yeah.
Okay, you had to be about a 30-year-old going, okay, I'll catch it when I'm in my 50s. That's the kind of wealth destruction. It doesn't come back the next day. Okay. Now, I think this one could come back faster than 29 for a number of reasons we don't have to get into tonight. But be that as it may, nobody wants to take that kind of hit on their portfolio.
Yeah. So with what you're seeing, everything is almost even more lining up, especially with the volatility. And regardless of, as you mentioned before, there's sometimes where God has his own timing and he throws a curveball. What I'm gathering is that to you, it doesn't really seem like fast forward 12 months that there's almost, it's a very, very rare realm of possibility that our market is still intact, basically. Like you think that we are most likely heading towards a major correction, might you call it, in the market.
So I say this, I say, look, anything is possible. I've traded long enough that when somebody tells me it's impossible, I just tell them they haven't lost enough money on Wall Street yet. Okay. I have seen the impossible on Wall Street too many times since the late 90s to say that's impossible. Somebody want to tell me that the Dow's going up 2,000 points tomorrow? It's possible. It might not be probable, but sure, anything's possible. So having said, but probability wise, there's no good news. There's no good news on inflation. There's no good news with the Fed pivoting. There's no good news in Europe. There's no good news with energy. There's no good news with OPEC. There's certainly no good news with the Biden administration. There's no good news with the Russians. Now there's no good news with the Chinese. I mean, where do the people think the good news is going to come from? And when they talk about earnings are all hindsight. So I don't care if every company on Wall Street blows out their earnings in the next 3 weeks. I don't really. No, that's all the past. Now that might goose the market for a day. Okay, but that doesn't mean. But when they turn their
quarter targets or their first quarter targets,
yeah, but when they look at their fourth quarter, well, it's going to be the earnings are going to be looking at third quarter. So when they go to do their fourth quarter analysis. Look, and I said this on the broadcast with Mike Adams. Look, every time the market rallies, they now gave the Fed license to continue. Okay, the market is not taking the hint from the Fed. The Fed told you what they're going to do. And nobody believes that the Fed's actually going to follow through. Only the Fed has been consistent, both in their speeches as well as their actions, all year. And to the complete surprise and shock of Wall Street. And the Fed is going to continue. There is no pivot coming. They are going to break something. They're going to break it by design. I talked about the reasons why with Mike Adams. And everybody thinks that the Fed is there for the stock market. And part of that is because of them improperly acting over the last 20 years, like that was their mandate, when the Fed is there for far bigger reasons than to support you buying Tesla.
Yeah.
I mean, that's not what the Fed is there for.
Yeah.
But that's what the investor class has come to believe. And because of that, they've been very reckless in their investment decisions and in their leverage. And I think the Fed is taking away the punch bowl. And so not only do you have the Fed taking away the punch bowl, but then you have the economic policies, which are different coming out of the Biden administration and Congress, which I would argue, I know the Fed gets a lot of blame, and they should, because I got a lot of bones to pick with the Fed. But if you want, I'll tell you leave it to the Biden administration to make the Fed look like the adults in the room. Okay.
That's a good quote.
Seriously. And they do. They're making the Fed look like the wise old man that's having to put a stop to what Congress
So looking at, what this means on the ground for the average person, like let's first take a
Right.
look at, because you've, I think, studied a lot of history and looked at just what happens to life. And I've also, in listening to you and talking to you, you're really good at extrapolating data and painting a picture of how life changes and looking at just different cycles of humanity, civilization, etc. So let's just pretend, as a hypothetical scenario, that by June of next year, the Dow's at 15,000. What does that look like in terms of everyday life in America?
All right.
Paint a picture for us.
Yeah, we'll take a couple of different classes. We'll take an entrepreneur for one. So an entrepreneur is going to have harder access to capital because the capital is being destroyed. Credit cost of capital will continue to rise, meaning interest rates are going to go up. And even if there is money to be deployed or loaned, because of the risk of the capital, they'll require greater interest rates to be attached. The good news for that employer, that entrepreneur, is if he's hiring, he'll have a better selection at a lower cost. Now, if you're the worker, you're going to have to look for a job. I mean, you'll just be happy to have a job. And I saw this in '08. I owned a company in '07 and '08. And I was so happy for the crash because from an employer standpoint, it was getting totally out of hand in '07. I mean, the college grads were coming out, and every college grad that we interviewed thought it was a rite of passage to come out of college and get paid six figures. Like, that was crazy. Like, that's crazy. And they were just happy you were interviewing them in '09. Okay. They did not have a strong negotiating power in '09 like they had in '07. So from an employer standpoint, it was really good. From the standpoint of investor. Oh, and let me just say with the entrepreneurs, what's great about creative destruction, what's great about what we're about to go into, besides the fourth turning and more macro conversations, but just at the ground level, is necessity is the mother of invention. Okay. And so it's during these collapses, it's during these, we'll call it economic cleansing events, that you get a whole nother class of innovation, okay, and entrepreneurs that begin to rise up with new answers, new questions, and new ways of doing business. So I think that in this regard, from an entrepreneur standpoint, there's going to be a lot of advantage and a lot of time that they can pour into the new inventions, and really offering, at the ground level, opportunities that didn't exist prior. Um, when it comes to an investor, the investor class, not worried about the entrepreneurs per se, but when it comes to the investor class, um, it's going to be it's not going to be good. I mean, it's just, I mean, how can it be? If you're an investor, so let's take our asset classes. Okay. So for people that need remedial economics and asset classes, you have precious metals, you have real estate, you have bonds, both corporate as well as government bonds. You have equities. Um, oh, I mean, you have crypto now. Okay. It's a new asset class. And you can argue you got collectibles and fine art and all that stuff, but we're putting all that aside, I doubt you have Picasso's hanging in your living room, Seth. So we'll
I've put that money towards bags of rice and ammunition.
there you go. Well, there you go. Yeah. I don't have any Picasso's either. Um, but getting to, outside of the collectibles, so getting to the main asset classes. So we'll take gold and silver. Gold and silver, I'm going to say a couple of things. There's always gold bugs in the audience, and I love gold. Look, I was buying gold, bought gold at the day of the low in like 99 when it was like printed. I think it was like 265 an ounce or some crazy thing like that. It was like, so for people that don't think I like gold, I love gold, I love silver, but you have to understand how it works. When does it go up and when does it go down? Now, let me say this to the gold and silver guys out there, because they're always like, why hasn't it gone up yet? And don't you know it's extremely undervalued? And blah, blah, blah. And I have to remind people, do you understand that gold and silver is a national security asset? You understand you're dealing with a national security issue? And you get the blank stare back, like, what are you talking about? I go, well, it directly competes with the US dollar. That was the former currency. Okay. It wasn't just a piece of metal. So what do you think? What do you think the power that is going to do if that asset class gets totally out of hand on the upside? Okay. What do you think life is going to look like in a system predicated on debt and leverage? Okay. So they will allow it to rise at times, but I tell people, you are not going to see gold and silver go parabolic and go to the moon until the dollar is collapsing. And I have some good news and some bad news. The good news is that you can make a lot of money with gold appreciating. The bad news is you're not going to want to live in that day. This is not going to be, oh, gold is $50,000 an ounce, so I'm going to go buy out to the dealership and buy a Ferrari. Okay. The reason that it's going to be going for 10, 20, 30, $40,000 an ounce is because the world as you know it is over. Okay. So having said that, when we get into gold and silver, do I believe that it should be part of every investor's portfolio? Absolutely. Okay. But that is an insurance policy, and that is a long-term position. Don't think that you're going to invest in it and get rich tomorrow morning or somehow be happy, and don't in tracking it on a chart every day.
Yeah.
It's just not the way it's going to work.
That's,
Um,
I guess I would fall into the class of being more of a gold and silver bug. And it also comes from, I used to work in the jewelry industry in New York City in
right.
one of my, kind of incarnations, and just fell in love with it as a material. And, I work with, this guy named Kirk Elliott, who's a precious metals dealer, and he comes on my show. And, one thing I always tell people is I try to say, look, you don't buy gold and silver to get rich. You do it to preserve wealth. And that's how
Yes.
I've approached it. I'm not right now, I'm not, if I have any excess money, aside from say buying diesel fuel, rice, ammunition, I might put a little bit here and there into gold or silver. And I'm just doing it really as a long-term wealth preservation that, regardless of what happens, I'm going to hold on to that and hope that I don't have to use it. But if I do have to use it one day, it's there. And chances are, if it is the day that I have to use it, that because everything else has kind of failed, that I want to have that by my side. So I just want to throw that out there because I just yeah, continue
I
on that.
Yeah, and I think you're no, I couldn't agree more. And I think that silver. So let me be a little bit more specific, and we can move on out of gold and silver. But I'm way more of a fan of silver than gold. Way more of a fan for a number of reasons. A, when they do go back, when they actually have true price discovery, silver will outpace gold at least 3 to 1, at least. And it could be crazy. I mean, historically, it's had a 16 to 1 ratio. I think right now it has like a 90 to 1 ratio. So it's crazy. So silver, and once it has true price discovery, let's say gold's at 10,000 an ounce. Well, you're only going to be doing major purchases with gold.
Yeah.
So silver is going to be used for everyday transactions anyways, just because of its value. Um, so that's gold and silver. That's kind of the precious metals. When we get into the equity market in 401ks, and this is not financial advice. I don't give people financial advice. So we're going to talk about what I do, not what people should do. Because I'm sure this program is sponsored by the SEC.
They love me, like most three-letter agencies.
Right. So, okay. So equities, you can, this is what I don't understand about the average investor. The market goes up, the market goes down, and they just kind of hold on for dear life over the course of time. And they take these huge hits, these huge drawdowns. And what I don't understand is why, when they come to a period, and everybody has this idea that the investment decision that they make is like set in stone and it's forever. I keep finding that with people, like, oh, and I'm like, I've had some friends over the last couple of days who had that same mentality, and I said, look, why don't you just go liquid into cash inside your investment vehicle and just wait it out for a month and see, and then slide right back in. Do you think that all of a sudden there's going to be this huge bull market over the next 30 days that you're going to miss? Okay, so just, and when I said that to this woman, it really arrested her, and she was like, I said, we too many times we look at our decision making as it's like from here to eternity. Like we can't change our mind, we can't pivot, we can't. And I really I'd like to see people start being more fluid in their decision making and going, okay, this isn't forever. We're making a decision today based upon available information. And as I tell people, I reserve the right to change my mind in the next 5 minutes. I mean, because you're looking at you're constantly assessing the situation and data and where you're at in history. And so I just think that's wisdom and prudence to go, with the information available to me today, this is what I think. But if new information presents itself, I reserve the right to change my mind or to say I was completely wrong. And I think that that's a healthy way to especially for investing, is to not,
So with
you know,
a 401k, for example, I'm guessing that you wouldn't personally, you're not advising, but you wouldn't leave your money sitting in the stock market via a 401k at this stage in history. That you would you
Well, I
probably be
mean,
more
look, if
likely
I
to.
was, yeah, I mean, look, hey, if you can take, if it was me, I would ask myself, could I, look, it's all about risk reward. All of life is nothing but risk reward assessing. Okay. And it's not that you're clairvoyant and you know, because you don't know anything. And I'll tell you this, the people that say they know really don't know. Every time in my life that I knew that I knew that I knew, I was in for it. Okay. So I really shy away from people that claim to be the authority. Okay. You can have a strong probability, but unless you really know that God told you, there's a few things in life that I will defend, like tenets of the faith. Okay. Outside my core tenets of the faith, we can have all kinds of interesting discussions. Is the way I approach this. Um, so I would ask myself, what's the probability? And can I live with a 50, 60, 70% haircut over the next 3, 4, or 5 years? And if you say yes, and it's now here's the problem. You're going to say that, and I want people when we do, like the military does wargaming all the time. I know the government agencies do. And I say this, when you're doing these type of potential outcomes, you don't need to write it down on a piece of paper. This is not an intellectual exercise. I want you to think about what that loss would be. So, of a $100,000 account, and maybe it loses $50,000. I want you to sit there and spend 30 minutes thinking about what $50,000 can buy, how hard you worked for 50,000. I want you to think about what the next couple of years in your life looks like. Okay, we don't give it 10 seconds of your thought. Like, and I do this with my son when we're reading the Bible, right? Like, put yourself in the shoe of David walking down into the valley up against Goliath, picking up a stone. Like, are you kidding me? Like, think about what you're reading and put yourself in there, and you will come out of these experiences, whether it's reading the Bible or reading history or trying to do problem solving or wargaming in a, to the best. And this is what sports athletes do all the time. Like, they visualize what they're about to do. There's a heavy visualization that goes into what they're doing.
On your
Okay.
brain, because I've studied this, somewhat extensively, and your brain literally can't tell the difference between you experiencing something, and if you can visualize strong enough, then between an actual visualization of that thing, which is why in Olympic
Really?
athlete they use oh yeah, Olympic athletes, they use visualization as a significant training tool
Right.
because they visualize, say, hitting the perfect high jump over and over and over again so much that their brain actually wires their body and their nervous system to do that. And so that's one of
Wow.
the ways that they actually practice. So I think that yeah, what you're saying is, really put time into these decisions and think about that. It's a great. It's a what does it look like if you lose 70% of your money in the stock market, right?
Yeah.
That's
And
yeah.
some people can, and some people, and look, everybody has a different, I say this about investing because people ask me for investment advice all the time. And obviously I can't legally give it, but I tell people, I said, look, everybody has a different risk profile. Some people want to be in US treasuries and some people want to be in junk bonds. Okay. I mean, completely separate ends of the street, right? So everybody has a different risk profile. Everybody has, the 65-year-old invested in the stock market does not have the same time horizon as the 20-year-old. Okay. I can do quick math. No way. Okay. So the 65-year-old is much more sensitive to the ups and downs of a stock market, much less a crash, than a 20-year-old who just got hired and is just starting a family or starting a 401k. The 20-year-old is probably not going to do anything. He's got 50 years. Okay. Um, and then obviously it gets into weighting in your basket in your portfolio. How much gold, how much silver, how much real estate, how much what does this look like? And what are you happy? What are you trying to get? Are you trying to be the guy that makes $10 million? Are you trying to be the guy that, like I've talked to people all different spectrums. Some have millions and some have $10,000 in a 401k that they forgot about and they're barely making enough money. And $10,000 to them is like the widow with a mite, right? Like it's all the money they have in the world and they need to treat it accordingly. Okay. So this is why giving general financial advice is a horrible thing to do. It's just horrible to do. Now, I will say this about gold and silver real quick. If you don't have gold and silver in your portfolio, I think you would be remiss if you did not reanalyze that situation. Okay. Why do I say that? I say that because A, it's an insurance policy in times of complete economic, I won't even say collapse. Let's call it chaos.
Chaos.
And number two, you've got Russia and China and the BRICS nations and the underdeveloped nations that are all telling you it's real money and it is soon going to be part of a new financial system. I would rather take their word for it than wait for the president to announce it on TV when you can't get gold and silver. Okay. So it should be my personal opinion. It should be part of everybody's portfolio. Now, some people have asked me specifically, well, gold and silver, buy it now. And I go, well, that's even tough. If you already have it as a percentage of your portfolio and you're happy with your allocation and you're just looking to buy more, you might want to wait for you might want to wait for the stock market to crash. Why? Because it got killed in a liquidity crisis in '08. And only after the stock market bottomed did gold and silver take off. But the caveat being, if you have none in your portfolio, you think a couple dollars to the downside on silver is really going to make a difference versus getting shut completely out if something catastrophic happened? For example, I'll give you a catastrophic example. Do you think, nobody knows, but I would make a stab and say that if a nuke goes off tomorrow morning, gold and silver will probably tend to rise that day. Okay. Because it will be a brave new world.
Yeah.
So if it's just if it's just a liquidity crisis that's hurting Wall Street, yeah, it's probably going to go down. But if Wall Street crashes because the Russians set off a nuke, hey, all bets are off. Okay. So this is where nobody knows and nobody can tell you. And when you're getting into investment, this is why, Ecclesiastes, cast your bread on many waters. This is where you do need diversity. Okay. You can't just be, I tell the gold and silver guys, don't just be in gold and silver. That's crazy too. So let's have a balanced approach. But yeah, on the equity side, the bonds get way harder. And right now, look, there's a faction, there's a group that believes that we have seen the end of the bull market in bonds. Now, I'm not going to go into the cycles and why they believe that. That remains to be seen. But clearly, over the last 12 months, 18 months, rates are continuing to appreciably go higher. I will say this: in times of not uncertainty, so in a typical crash, the bond yield is going to go down as everybody rushes into the bond market. 2008 crisis was a perfect example. However, if you start getting into systemic risk to a financial system or systemic sovereign debt risk, which is now what is starting in Europe and Britain.
We're seeing that. Just a quick thing, just to make sure I'm on the same page as you. So when you say sovereign risk, that's when you're talking about central banks failing.
Talking about, right? Nation states.
Okay.
I'm talking about nation states. And here's the point of that. I got to drink my coffee. The point of that is that in '08, '08 was a housing crisis that really spilled over into a corporate crisis. Yes, you had central bank intervention, but they weren't intervening with each other as much as they were intervening um, in the local affairs of basically misallocated capital at Wall Street level. Well, that's not what we're talking about right now. We are talking about systemic risk in a misallocation of capital, really at the central bank and bond and even currency market level. Okay.
So these are
So if we're,
uncharted waters.
yeah, I mean, and this is why I won't go down this road tonight, but I had a friend of mine say to me the other day, well, why can't they just print? Why can't the Fed just print? I go, well, how much would you like to print? And he said, well, it'll cost a couple trillion. I go, oh, no, it won't. I said in 2008's crisis, the Fed had to loan 20 trillion to the Europeans. Okay, that's on record. 20 trillion was loaned to the European banks because of a 2008 housing crisis. We just destroyed 40 trillion in US capital markets to date, just US capital markets. So if there has to be printing, it will not be in the tens of trillions. It will be in the hundreds of trillions. And if you think we have an inflation problem now,
It's Venezuela. It's Weimar Republic.
it is this is where this has always been the end game. Okay. This is the end game. Now, the end game has lasted longer than most people imagined, and I think it's going to continue to last longer than most people envision. So I'm not saying it's going to happen tomorrow, but we're not dealing with billions. Okay, we're dealing in the tens of trillions. And we're dealing at central bank levels now.
So when you say this is the end game, what is in its end game? Like the Western financial
Well,
system or
so 2008, okay, so I'll give you an analogy and then we'll talk about what they did. So you find out that your son is doing marijuana and you're really not concerned because it's just marijuana. And you might even make some excuses in supporting him in that endeavor. Maybe, well, you're doing marijuana. I don't really want you to do it over at your friend's house. Why don't you do it at my house because it's safer? And before you know it, couple months, years go on, and he's not doing marijuana anymore. Maybe he's doing cocaine, and you're concerned. But what can you do? Before you know it, he's moved on to heroin and he's moved on to crack. And look, because the human body needs more stimulation. It literally gets conditioned. Or an alcoholic, okay, serious alcoholic, who is a functioning alcoholic. They're drinking more alcohol before breakfast than you and I can even imagine, Seth. We would be dead, and they're drinking that just so they can maintain. Okay. All right. If you detox that person, they're going to die. If you cut them off cold turkey, they will die. So medical professionals who are trained in this there's a whole regimen that they will go through to try and detox them. But I will assure you of this. Even if they are successful in detoxing them, the odds of them relapsing are through the roof for the rest of their life. Okay. That person is not going to be like you and me the rest of their life. Okay. They're going to probably have to change friends. They're going to have to change locations. They're probably they can't be around the substance. They can't be even in a bar. They can't because depending on their addiction level, They need a complete rehaul of their spirit, but also of their lifestyle. So I would argue that for at least 20 years, Wall Street has been that addict. And the Fed, how many times has bailed them out? And each time they bail them out, they increase their addiction level. Okay, why? Because the Fed has my back. We've heard this. The Fed has our back. Well, if you believe so, if your daddy is a billionaire, you decide I'm gonna be a race car driver today. Dad, I need $20 million. Are you going to treat that $20 million as if you worked for it? It has no meaning. And especially if it's going to make your dad look bad if you fail, you know you can go back to him and get more money out of him. Hence the term too big to fail that we've heard. So in 2000, so the derivatives, I don't even talk about derivatives right now because the derivatives are in the quadrillions. So if you and I can't imagine a billion and we can't imagine a trillion, the derivatives are at least a quadrillion. That's
So
1,000 trillion.
derivative meaning kind of like, I saw the movie The Big Short, right?
Right.
Where they have a bundle of mortgages packaged that's being sold, but then there's almost like there's bets being placed on that, and then bets being placed on those bets, and bets being placed on those bets, right? So basically, they're deriving more capital off of a central piece of capital. Is that correct?
Yeah, look, they have options markets on snowfall. We have options market on precipitation. We have options markets on temperatures. Okay. They have financialized almost everything and then added extreme leverage to it. Okay. So the Fed is taking away the punch bowl. And the markets don't believe that. So the markets, I will tell you this: if the Fed continues down this road, the markets are not going to say where they're at. It's that simple. Okay. Um, and we'll find out because we haven't had capitalism. We haven't had a true price discovery mechanism. They were making bets with money that was being handed to them from the Fed. They were making bets through leverage. They were you start to unravel this, and the banks make a lot less money. A lot of companies start to go under. It could get bad really fast. Okay. So, and I'm talking about the insurance companies, the banks. Hey, how about all the universities and their endowment programs? Okay. It's not just a bunch of billionaires playing in the markets. This is everybody is in these things. Okay. Or you're dealing with entities through you might not be in the markets as a listener, but I assure you, all the third parties that you're doing business with are, and it will directly impact them.
Pensions, Social Security, just all the different.
All of it.
Yeah.
All of it. They're all there. So, and this gets into the retirement funds, which we will not go into tonight, but I can assure you the retirement funds will be in serious jeopardy. Okay. At a systemic level. This isn't just if the markets, let me just, we're down this rabbit trail for a second. This is if it gets into the banking system and we go, in my opinion, we go below 21,000 on the Dow. As long as we maintain a normal crash, which is typically like 34, 35%, something like that, like 87 and 08 were normal, then we'll be fine. Anything far greater than that, you start to see European banks going under. You might, when I said this said this previously, so we'll talk about banking real quick. I've had people ask. My personal opinion, everybody needs to be out of. I am not going to have an account with Bank of America, JP Morgan Chase, Wells Fargo, or any national bank. The people, those are not banks, not in the traditional sense that you think they are. They have all kinds of exposure and leverage on Wall Street. So there is, and they have a lot of systemic risk with the European banks. Okay, I would be in a local credit union, a state bank, and if you have a lot of money, I would be in multiple banks. What's another question? What do you got? What have I not covered that the people are wanting to know about asset classes?
One of the biggest questions that I am getting is if there is a crash, hypothetically, let's go back to our scenario where we're down to 15,000 by June. What about mortgages? So, what if, say, someone, recently bought a, let's give you a scenario, a $500,000 house, $500,000 house, which is really kind of your average house in America these
Right.
days. I mean, with what's
Crazy,
happened with the housing market.
crazy.
And say they put 100,000 down, they've got a mortgage for 400,000, their monthly payment is 2,800 with taxes, right? What happens to their mortgage when we get to that place where the Dow's down, say 50%, down to 15,000? Is it
Well, I could care less. Look, if as long as you can afford, hopefully you don't have an arms.
yes.
Hopefully you don't
Actually,
have an
I
adjustable rate
my
mortgage.
stepdad just had to refinance. He had an arm and he went from 3% to, almost 6%, right? Like I feel
Yeah, I
lucky that my wife and I we bought I think a 30-year about a year ago we locked in at 3% or something.
so the thing that Seth that makes me there's so much I have to choose my words wisely because I know we're not sitting around having coffee privately. There is I can't use certain words. There are things being done on Wall Street that we'll say are not prudent. How about that for a euphemism?
I
They're
watched
not
Wolf of
prudent.
Wall Street.
Okay. And let me tell you, Wolf of Wall Street is tame. It's tame. Okay. Um, yeah, I won't go there. Um, the reason I say it's not prudent is they're selling arms, adjustable rate mortgages to people when interest rates are at a 40-year low, almost on the ground, on the floor at 0%. Like, what direction did you think, go back to probability? What direction probabilistically did you think it was going to go towards? Zero or higher than two or higher than three? Okay. It's, I won't call it criminal, but you get the point. And they got a lot of people in there. And if you think it's bad in the States, I won't go into the numbers in England, but they have a ton of people in arms over in Britain. So that's the kind of stuff we're talking about. So if you're in a fixed, look, if you're in an adjustable, I'd lock that stuff. I mean, like I'd fix that, or you're in trouble. Um, if you're in a fixed, hey, I don't really care who's holding the note. I mean, the notes are going to get purchased by somebody. So if the bank that's holding the note goes under, they're going to take all that off their books, and somebody's going to own those notes. You're not going to get a pass. Okay, you're not getting a pass because it's a legal contract. But I don't really care who owns the note. I don't care where I have to now mail my check to. Am I missing something in that question, or did I
No,
answer
it's
it?
helpful. I mean, so what I take away from that, and this, I'm, didn't pay off my house in a year. I'm not that kind of guy that can do that. So, kind of how I'm looking at it is, I'm saying, look, as long as let's just say that things do bottom out or it gets really rough, I'm saying, And that's part of, actually, for me, part of the reason why I want to have a little bit of precious metal set aside. So if I have to, worst case scenario, I can pull some of that out to at least make sure I'm making my monthly payments. I think that's the big thing for people, is that, it's like, yeah, if you're in a mortgage, think about it. If the market goes down 50%, there's going to be a lot of layoffs. A lot of big companies are going to shut down. So can you lose your job and still pay for your mortgage? That becomes, I think, the bigger issue in that kind of scenario.
Yeah, and I would say if you're looking to buy, I'm not sure there's a rush.
Yeah.
Okay. I mean, I would again, I talked about this on another broadcast. Cash is a huge position. That's actually the other asset class we really didn't talk about, is cash. Cash is a huge position. And I know everybody wants to talk about the dollar and assign it to the graveyard tomorrow morning, but I really do not think that's the case yet. Okay. We're seeing nothing but the dollar appreciate relative to all currencies around the world. Okay. That doesn't mean that the dollar system doesn't have its problems. It does. But look, it's the prettiest pig. Okay. It's the pig with lipstick. Okay. So you have to, it's not, cash is a huge position. Why is cash a huge position? Cash is a huge position because hardly anybody can put their hands on cash in America. When they do need to raise cash, it's going to be a fire sale because everybody else is going to need to be raising cash. So you're not going to get what you want. Okay. We've seen the famous pictures of the 1929 crash and these beautiful cars just being dumped. I mean, like, it's going to be liquidation. So, um, you're going to be the person, like the person in 2009 and 10 and 11, that could walk into a neighborhood, and if they had cash, oh my gosh, the deals they were getting on homes, crazy. I know people in Florida who got $5 million homes on the water in Florida for 1.3. I mean, that's a deal.
Yeah.
Okay. I mean, now the banks weren't going to give you a $1.3 million loan, no money down. That day was over. Okay. So you might have to put 25, 30% down. But if you could do that, you got crazy deals. And I think so. I think that's, look, being prudent and being smart. It's hard going against the narrative. It's hard being the black sheep. It's hard walking, your own road. But I tell people, I raised my son with this. If you ever find yourself in the majority, you need to stop and seriously question yourself, because that doesn't mean the majority is always wrong, but the majority is hardly ever right. Okay. And if you want to live in the neighborhood with all your friends, invest the way they do. If you want to live in the neighborhood with the billionaires, invest the way they do. They're telling you, it's just that nobody believes them. So they're not hiding it as a secret. But nobody wants to do that. Everybody wants to get stock. Everybody would rather get stock tips from the shoe shine boy or stock tips from their neighbor. Like, dude, if your neighbor really knew what he was doing, he wouldn't be living next to you. It's like, or I have some people that think I must be some like awesome trader. And I'm like, dude, if I was an awesome trader, I'd be trading this crash from my yacht in the Med. Okay. So let's use a little, I mean, maybe I have some wisdom that God gave me, but I'm not trying to be somebody I'm not. I'm not, all knowing. And we really have to. I'm waiting for the adults to come back into the room and we have adult conversations and think through these issues and really, really stop just getting into a herd mentality, because the herd does get slaughtered. History is very clear that the herd, almost at all times in history, are there for the slaughter. And it's the few that pick a passage that Jesus warned you know when you see these things. He was talking about the army surrounding Jerusalem, flee. Everybody thinks that that's for now. That was literally fulfilled 40 years after, when the Romans began to surround Jerusalem. There was very few that fled before they shut the gates, and over 1 million, Josephus records this, over 1 million people were slaughtered in Jerusalem by the Romans. Okay. And it was so horrific, they slit their bellies open to get the gold coins that the people, the Jews inside Jerusalem had swallowed. So it was blood everywhere. It was total. Josephus records the carnage. Okay. So I go on that little tangent to say that it doesn't mean be a maverick for the sake of being a maverick and just be a total rebel and don't use any logic or reasoning. But it's to say that it's a false comfort that we all take when everybody else is doing what we're doing. It's a false comfort. It rarely works out for us. So I just encourage people to think differently and be a maverick. That doesn't mean you're always going to be right, but own your decisions, own your investment, and don't be afraid of being different.
Yeah. All right, folks. So that concludes part 1 of the interview. We still have almost another 2 hours worth of conversation that we're going to be publishing on Friday at 2 p.m. We'll do it in the same format. So I'm live right now. So we'll do it in this format where we're publishing it live. That way you can see, you get the notifications. And part 2 is where we get much more into the aside from the financial, the real Aaron Brickman conversation. We dig into the fourth turning. We talk about the Great Reset, the rebuilding, the collapse of the old systems, the rebuilding of the new systems, how we can make it through this, which he's very confident we can. It's not a certainty, but he is very confident that we have the ability to get through this. That's for sure. He shared a lot of stories from his military years. He's actually Aaron's Special Forces, and this guy's like, he's not to call him a killer, but this is a guy that was like the tip of the spear on operations. This is a guy that's the first person going in, knocking down doors over in the Middle East, et cetera. So he's got an incredible background. And I think that you're going to really, really enjoy the second part of this interview, because what we also do is we break down just in a very real way where we're at in history and where the elites are at. And I hate using that word elites, but I use it because it just, what I'm talking about when I say it. And he gives a lot of information that really paints a picture that he really believes that the elites, the powers that be, are very, very weak. Actually, he said that he believes they are in the weakest place they've ever been, which is encouraging. Now, he also said it's the most dangerous because a wounded animal is the most dangerous, but that they are very, very weak. So we talk about, how to wake people up, how to get the American people to really understand what's happening in this world and really step forward. We go into what kind of a revolution, a righteous revolution, is needed, and not one of violence, but one of non-action. And anyway, I won't say too much more about it because I think you're going to really, really enjoy the interview. Like I said, it'll be 2 p.m. on Friday, Eastern. And I also just want to thank, I want to thank all of you. I see we've got, almost 2,000 people watching across different platforms. And I just want to give you a sincere thanks. I feel so blessed to have you all along with me on this journey as we're discovering the truth and figuring out how to save our country, our families, ourselves. And I feel so lucky to have you here. So I really, really appreciate all of you that take time out of your day to join and watch these live shows. And as you can see right now, our goal is to really start having a show at least Tuesday through Friday at 2:00 for you. It's not set in stone yet. We're still going to have our Tuesdays and Thursday shows, but we're really working towards producing more content and more reliability in the schedule. I also want to say, make sure you join me tomorrow at 2 p.m. Eastern, because I'm going to have Trevor Loudon, who I've had on before. We talked about the enemies within the church and the subversion of the church within America by the communists. And we're going to be talking all about the communist roots of the gay and trans movement, which is going to be quite incredible. So, because if you watched the interview I did with Kevin McGarry yesterday about the Marxist and communist and satanic roots of BLM and abortion, we're going to be kind of looking at through the same lens to understand, why is this massive push of transgenderism and the drag queen story hours, what's behind this? And what made me want to have Trevor on is that I recently watched What is a Woman with Matt Walsh and was incredibly impressed. If you haven't watched it, I highly recommend watching What is a Woman with Matt Walsh over the Daily Wire. But it led me thinking, because he didn't really go into the bigger picture of who's behind this. Why is this massive push happening in our country to move our children into a place where they don't even know whether they're a boy or a girl? Like, why? What is this? And so that's going to be my discussion with Trevor Loudon. So I hope you can tune in tomorrow at 2 p.m. Eastern for that. It's going to be an incredible show. And that will be a full live show. So we'll have the Q&A towards the end as usual. And that's it. So thank you again for joining us today. It's always a pleasure to be here in front of a camera with you. And I will see you all tomorrow at 2 p.m. So have a wonderful day. And also make sure you put a little mark in your calendar, because Friday, 2 p.m. Eastern, is part 2 of the Aaron Brickman interview. And it's going to leave you, I believe, with a lot of hope for the future. And also some feeling of responsibility. And that's the thing, is that Aaron's a military guy. He doesn't give you false hope. He does not want to pump hopium. He says, look, we can do this, but it's on you. So you're going to really enjoy that interview. So thank you so much. Take care.